Good afternoon, Catherine Gross here, advisor with ProStatus Financial. Just wanted to touch base on something called phantom capital gains. For those of you who have non-qualified accounts like TOD brokerage accounts, non-qualified brokerage accounts, those tend to have mutual funds in them that could present a tax issue with you for phantom capital gains. With the stock market being down 20.5% and the bond market being down 15%, many of the investors are selling off their mutual funds to stop the losses. Well, what does that mean for those of you who are holding on to your mutual funds during the bearish market? Well, at the end of the year, you're most likely going to get a 1099 that is going to show capital gains. And you're going to be wondering, how did I get capital gains and have to pay tax on these capital gains when the market was down and I didn't sell anything? Well, for those investors who have sold their mutual fund, the mutual fund investor had to liquidate some of those positions in the mutual fund. For you, many of those investors had sold where the shares were higher than where they were originally purchased. So basically, for instance, if they had Apple stock and they purchased it for $60 a share, and then they sold off today, Apple's selling at $140 a share, there's a $90 per share gain that you will have to pay a piece of that capital gains. So if you currently own mutual funds in a non-qualified account, you should be speaking to a tax advisor or a financial advisor on how to avoid those phantom capital gains. If you have any questions, give us a call, 410-863-1040. Again, 410-863-1040.